Today is October 22nd, 2025. Today's journal is going to be focused on the psychology, mainly because that's like the most important part. And today is going to be a perfect example of that. Yesterday, we traded and we went on tilt. And by on tilt, we took too many plays we were supposed to take, too many more plays than we were supposed to take. And we ended the day down $58. But at one point, we were down $170, right? So keep that in mind. We made a lot of that back. But before we went on tilt, we had lost the first play and then the second play, which was a downsize. On that downsize, when we lost, I think we were only down $27 for the day, bringing our account back down to 600. We have just been teetering around that, right? We only have 500 in the account. So we were still up $100. Now, when I'm focused in on that that very micro scale, to me, it's like the week is a Tuesday and we're already down. That's not good. I need to be making wins when we know there's so many red flags with that psychology. But this is the point I wanted to make. Today, I just took two full banger plays, two 40% plays. Doesn't happen all the time, but when it happens, right? And if I would have stopped yesterday at the $600 left in the account, down just at $27, today I just made $79. So I just want you to think about this, right? We would have been up the most, because on average we're getting $30 to $38 per day, and that's if we don't lose the second play too much, or we might make $12 like we did, or $8 like we did for a break-even day, because we lost the first one but won the second one, and vice versa. So the real part that I want you to focus on in the psychology is the fact that you have to look at this for the longer term. And I'm not saying so far, like years in the future, but your rules have to balance. Your rules have to be focused and rooted in the long term, majority of the long term. And think about it as the high time frame. You always hear traders talk about, oh, the trades are really on the higher time frame. That's really telling you the direction, right? Let's change that back to psychology. Let's change that back to trading. If I'm so focused on the 1 minute and the 5 minute, meaning Monday and Tuesday, that individual trade, that's that first 1 minute, 5 minute, right? Might even be 1 minute, 2 minute. But I really need to be focused on the 3, 4, 5, the 6, the daily chart, the 3 and 4 hour chart, the daily chart, because that's going to be week over week, month over month. So if I would have looked at it as last week, we made 100. This week, we're only 2 days in. We could still have one green full solid day and run it and still kill and crush the week. So right now, we're already 3/4 of what we would have made the following week. That's $75. That's $79 that's almost the same 100 we made in a week, and we're halfway through the week if we would have followed the rules of getting out as 2 losses. And I'm just reiterating this for myself because that is the most important part. So as you can see, we took the 2 trades. I'm going to minimize that. I'm going to just point to these real quick, just so we can point out some things that we saw that worked out great for us. But price was the typical setup of, we had at the top, so above us here, we had overnight high, and then previous day high was way up here. And then below us, we had overnight low, which we actually bounced off of, overnight low, and then previous day low was below. So we didn't have that attraction of coming back into the middle to test. So we kind of pictured it was going to run away from the middle, and the middle meaning the orb. So we had this yellow box is the orb high and low, that 9:15 candle. So that 9:45 candle. And then the blue one is the 8 o'clock candle for that first 15 minutes. And so you can see where we ripped out of it here, came back in and tried to hold the middle This just wasn't our play. This isn't our area, but we've been watching that to see how it goes. And based off of that, this is why we took this one here. So a little bit above my area, but I'm still glad that I took it. And it was also how I took it. I got in and I saw minimal drawdown. And I could have done that same thing with, it looks like the 5-minute candle closed below orb low and overnight low. And then we got a retest, and then when we dropped, so we would have still gotten ours. We still would have gotten ours for sure. So for psychology wise, that would have been a better play because it would just been our rules. So what we ended up doing was we rejected off the middle of that 8 o'clock orb. And that is the area that it would normally fail off of and come back and retrace to. So once we 5-minute candle close out of the box, I wanted to see us go back in. And once we established that 5-minute candle, this one is telling me I was basically watching for a 3-bar play, and I took it as we pushed through because of the fall and the dump. And then I'm going to point out this one here on the 5-minute while we're here. We got this flip back here, but I really took this based off the 1-minute because we had all of this dropping here. Excuse me. And this right here was also the other play we were looking at, was the previous day low. So I'm going to break it down here on the 1-minute. Yeah. Close back above that actually, but still. And so you'll see why I keep looking at the previous day low here, because I believe that's where all the liquidity was. So price came down and we 5-minute candle close out of this box. Let me see here, actually. So this was the 5-minute candle close out of this box. Oh, I'm sorry, it was right here. So 5-minute candle close originally out of this box. And I told myself when we come back and test it, that's when I'm going to get in, or I'm watching to get in. I wanted to see it go in and fail. So to me, we have sellers coming in, right? And then we have, it looks like a buyer off of the overnight low that's coming in right here. And these buyers, especially with this volume that's right here, these buyers right here are saying, hey, I'm in and I want to get some profit. They're hoping that it's going to take off to get up over here. And then the heavy sellers come in. And now, as we pass through this, as you can see, this area, and in this area, right when we get back below this and we test this area is where we dump. These people become liquidity, these buyers, because they're all this volume's coming in. That's 58,000. Right before that, we were in the 20s, and now we went up 50. So double the volume, and then now this comes right here, and there's barely any resistance holding it back to push it back. And now we sell from right here. And the reason we dump is because these people, these two candles right here became liquidity. They're looking to go in profit. They're in profit. Now they're coming right here. They're break even. And now they're dropping. And they probably put their stop loss right below here, below this candle. And then boom, they just become liquidity. And so the market structure of that is probably, to me, the secret sauce of what I want to keep focusing on. That's the area that I want to keep asking myself that question aloud. And that's what I did on this second play for sure. But we got in a little bit early just because we saw it failing off of this here. And to me, all of this liquidity was going to be right here. And so I got in because you can see where I marked this 5-minute candle here. So that's what the bottom of that is, which is also, where did I put that? That's the 5-minute low. That was a 5-minute low from overnight low as well. So it looked like we were bouncing off of that part. And so I didn't put the mark there, but I told myself right when we go to pass this is where I wanted to take it. And so we just saw the action trying to hold here. And then this candle is when we got in, as soon as it opened and it tried to drop a little bit, we marked it in and it gave us the order. And where that indicator is right here, this measuring tool, is about where we got in, because we saw it teetering around 0% there. And then price came down. It gave us our 20. And as we saw, I saw this close below overnight low and orb low. Now, this is what kind of gave me the confluence to hold a tiny bit longer, because I want to say break even was about, I'm gonna move the mouse so I can see, was about right here on this candle. It was right below that 5-minute lower low, that yellow dotted line. So obviously we pushed above it just a little bit, and then as soon as we came back, we locked in right here. So we were about right at break even. And then for our meeting, like, we hit 20%. And then the rule is, if we hit 20%, when we get back to break even, we sell. This red candle opened and just boom, I mean, instant drop. It dropped quick back to overnight low without any hesitation. And then that allowed me to pull my finger off the trigger. When I saw that, though, to me, we had a lot of people probably getting in here as well. Some buyers, same thing. We were sweeping this. We were going to take this liquidity out. So you can see the big volume that was coming in here as soon as we pushed past. So I set one contract. I sold the first one here. I had 3. Set one contract at 40%, and then I had the third contract loaded up with 60% number in, its limit order in, getting ready to hit it. And the moment I felt it vibrate and sell me at 40%, I locked it in so I can get back to the chart. And I just wanted to watch if it was going to try to push back. Any bit of trying to push back past 40% too much, I was going to get out and take the just take that sell right there. But when I say it locked me in, and boom, I locked it in, the limit order, and then it literally vibrated right after. It vibrated twice, like, up, accept your order, and then boom, we're taking that order and we sold it. So it was instantly down here at that time. So confluence was great. I would have gotten a 60% for sure over here. And as like I said, 40% is the rule. That's what we're trying to do, that 4-to-1. But it was nice to get that extra little pull and grab out of this. So that was that play. So now I'm gonna show you the second play on this. So obviously we sold down. As we're selling down, though, we 5-minute candle close right here. This candle, this big one here. We saw these candles dropping, boom, and this was 20,000 sales, 25,000 sales. So we saw big numbers. Like when it dropped, boom, we saw them, and I mean straight red on the ticker over here on the volume. So there was, I mean, if you could really see it, this right here is like a low volume node that Carmine talks about. So we have big volume here, no real resistance at all, and then boom, selling. It came back into this area, and then look what it did, right here. So now this to me is the reason why I was watching this. So we had a big, huge sell-off. To me, I'm bearish until we get way back up here. But now as we're coming down here, I told myself, if we 5-minute candle close below previous day low and we come back to test it, I'll take that. And now as I see price come down here, we break below this daily support. And so I know we could bounce here and go all the way back up. But what I was watching for was us to come back up here. And this is where I was going to try and find an entry off of a candle and skew my risk to reward in my favor. Because, and to make sure I set it up into my favor, because this right here, I could find that same liquidity like we were talking about, where people were coming in thinking it was going to go one way, and then they become liquidity for the market. I can find that above this. So I wanted us to come above this, sweep, and then let us go and drop. And as we were following through with the drop, that's where we were going to take the play. People thinking that this was a reversal and they were going to jump in for the ride. And so we didn't get that. And so I told myself as I came down here, and I told myself right around here when I saw this push back up, this wasn't the time to take a call, because the liquidity I wanted was up here. And then price came back down, and even though I was looking for shorts, I wasn't going to take it here, because I would have had to take it right at this lower low, and this could have been an area that we swept and went back in. And if I would have taken this probably would have given me 20%, and then I wouldn't have been able to hold that. Obviously, that went against me. You see what I'm saying? So I don't know. I can't gauge down here. Down here is an unknown liquidity, if that makes sense. Up here is a known liquidity, meaning if we push up here and we get above previous day low and close, and we try to tap, when we go to push back down, especially that means people would have been buying to get in here, trying to get profit up here. they're going to have to sell when they get down, because, and when they do, we were going to get flushes because they became liquidity, and I would have been at the top of that liquidity getting in. That's what I mean by known. So it's a lot more manageable versus down here. I could have been setting that up to become that liquidity. There's a chance that it's 50-50. Am I out of liquidity or are they? That's the question to be asking. So we didn't take it. And as now, when I saw we closed below this area here, this lower low, I'm sorry, I saw we pushed back up. And then we got big volume here. And I told myself, this right here, I saw this candle push down and then we closed back above this. So I told myself this area was an area of resistance, support, whatever you want to call it. That makes it a point of interest. If price pushed down here, I told myself if we push back above this candle here, this is where I would want to get in for these people who are sellers to become liquidity. Because if I get in around this area, their stop loss is going to be above it, and then they're going to feed the sell up, the buy up, I'm sorry. So now this candle came and we pushed back up. That wasn't what I wanted. I wanted us to close above this, especially being the first area, the first test of it. But it hit it there, it didn't give it to us. Price dropped down, you see all of that volume that came in. And then we based right here. This to me is us basing. We pushed up and then we pushed this one up. When I really got interested is on this candle. I told myself if we close above this, I wanted this candle to close above it, but it wasn't. I was watching for it is what I mean. And now when this one closed above it, that was a lot of the confluence that I needed. That even when it was pushing here, I said, hey, I just want to see it close here. I'll leave from here, from this green line to the top of this candle. I'll leave all of this on the table so I can know a little bit better. I'll leave that on the table. And now price pushed up and closed. This candle, I got in around this as it was pushing up here and tapping right here is when I marketed order in. Now, what I wish I would have done was paying attention to, okay, as we're teetering on this candle, as we're teetering around this height, what's the limit order? What's the number set at? Is it 70 cents a share or contract, stuff like that, right? That way, when this candle closed, I could say, okay, it was 70 cents, around 78 cents here. Let me set it for 79. Let me just pay an extra penny or two. Let me set it for 80. And I want to get filled right around here. So just a little bit of a pullback, I'm in. And that's what it did. It pulled back. But I'm sorry, that's not how I do it. I did it in this case. I was just marking an order, but that would have worked. It did give us the pullback. But regardless where we got in, this is about accurate because it was showing about 0% here as we were teetering. We still only saw 6% down, 7% the most. And so it kept coming back to test, and then it would eat it back up and get bought back up again. And so look how all this volume came in to get us above this. And then now we don't have much volume and we're still staying above. To me, we're not getting the sell pressure to sell down. And then over here, I'm watching the left side of these orders come in, and the buying is higher. And I'm just watching it. And because it wasn't a lot of buyers here yet, this right here should have probably, from when I got in, this should have been 40% if I'm being honest. But they weren't locked into it yet. And now when we got here, though, we got that 40%. So we had the volatility of it. It wasn't a lot of people because people probably thought this was going to go down. But to me, this was the draw on liquidity to come back to this previous day low. And as you can see, that's what we did. We came back, and then, I mean, look, we still, that would have been a dump for us. And so how I would have done this play would have been this way. I would have watched us come up, get above previous day low, right? That's where we are on this line. And now, don't take this first candle to drop past it. Let that go. If that wants to close in between it, let it close and then retest. Don't take the first one. Now, but this up here, coming back a second time, to me, this is a retest. This is the retest, and then we failed it, right? And then look, this is the retest of the fail. And now if we would have gotten in like right here, as soon as if this would have opened and then dropped and we got in thinking we were going to miss it, that wouldn't have been a bad idea. This would have probably stopped us out. And so this is where it just comes to timing sometimes and having a good stop loss and just the play being aligned. Ideally, we would have gotten into this one. If we would have gotten it, we would have missed this one. We would have hopefully opened and price would have pushed up for us. And this is why you want to have the retest, because if price opened here and then dropped and we didn't get the retest and then didn't go back, we avoid getting in. That's why we wanted to come back and engage with the area, because then we'll be able to see these psych outs. You know what I mean? So if this would have flipped and got us in down here, then came back green again, then we would just been psyched out. But if price opens here, comes down, we're not in it because it didn't test previous day low again. But when it comes back up and locks up green here, now we can 3-bar play. We can say, hey, the bottom of this body here, if we push past it, we'll get in. Boom, push past it, and that would have been the play to take. And we would have held. So we would have got in here, probably got 20% here, came back maybe about around break even, and then we would have dumped right through that. So good job looking for that liquidity. Super proud of you, man. Keep going. And just remember how this video started. The psychology of it is get out at those 2 plays, man, and call it a day. Close the computer, walk away, find something to do for 10 minutes, journal later. I'd rather you skip journaling because you got busy because you closed the computer down and you didn't want to sit there and just watch the market. I'd rather you do that than to turn around and jump into another play again. Looks like maybe another low volume node right here again because we pushed through. If we push back up, and look, this is the area. It's tapping into here. You know what I'm saying? And if we fall out of it, that's what I'm seeing here. That's exactly what I'm seeing. So good job.